Hello everybody, Nick McDonald here. Welcome to this week's commentary on the Russell 2000 and US equity markets. Looking here, we've got the Russell on the screen. I'm going to start with the weekly chart because we kind of saw this last week how we pulled back to that extremity of the 100% level, i.e. 100% of this move up, pulled back into that same low, made equal lows again, really just formed some support there, confirmed some support there. And then what we've done now, we had the bullish candle last week and we've got another bullish candle this week just gone. So when I say last week, bullish candle 2 weeks ago, and then another bullish candle this week just gone by, but at the same time we've broken up through the high of last week's candle. So if we look at this candle, it was bullish, a break up through that would have confirmed we should rally from here, and we've now done that. Not only that, but we've got another bullish candle. It's only closed slightly green, but it's a bullish candle, and what we really now have is two strong looking candles in the moving average buy zone, and we've got good support down here below the lows of both of these week's candles, and we've just got a nice clean run to 850 where we run into some resistance again. So based even just looking at the weekly chart, I am bullish on this. Obviously that would change with any breakdown through these lows, and equally any trade I took would the ideal place for a stop loss would be down below these lows and then looking for the run to 850 and potentially even beyond. Let's just make sure the other time frames back this up. The monthly chart is early days. Obviously we've got a bearish candle, but we've got 9 days left in the month, so after those 9 days, of course this candle might not even be bullish, especially if what I said on the weekly takes place and we rally up. We could almost end up with a green candle, or certainly a big long spike on this candle, and closing back up towards around about where it opened. So that candle is too early to say it's bearish. However, just looking ahead to the next month, if it did close red like this, if it did close bearish, the next month any breakdown through it would confirm a lower high. So looking out ahead, I don't think that will happen, but if it did, that would be starting to look really bearish, breaking down through these month's lows. But it's some way away yet, so we'll look at that more towards the end of the month as compared to looking at it now. Looking at the daily chart, we can see these equal lows formed at 780. We can see now we're just putting in these slightly higher lows here if we look at it on a micro basis, and if we just kind of the best thing to do rather than looking at that and saying are these actually higher lows or are they not, because the answer is on the daily chart they're not really. If we just come and look at some of the details, say by coming to a 4-hour chart, what we'll see here is we had a low down at that as we formed the 780 support, and we've pulled up and we've made a higher low. We pulled up and we've made a higher low again. That's just showing that buying momentum is stronger than selling momentum. At the same time, we've made higher highs, and any break up through here is going to be that break up through last week's high, and looking bullish for that run up to 850. Even just with this little bit of support forming here at 810, and in fact we had support join in at the charts on 810 in the past. Just the breakout through there will be significant, and a breakout through there would really confirm it, and then much more confident that we're going higher. So that's what I think will happen. Just coming in and having a quick look as well at the cash market, seeing how they back us up. The Dow and the S&P on the weekly charts both looking quite similar. Here we've got a nice pullback into the averages, bullish candle. It's a bigger and more bullish candle than we had on the Russell, and a breakup through that will be looking like the Dow continuing on up. Looking at the S&P, very much similar picture. Nice run up, nice pullback into that buy zone, nice small bullish candle, and we can see these higher lows coming in. If we came and looked at those on lower time frames, we'll see it more clearly. Here's a 4-hour chart, just see the higher lows kicking in there. And then lastly, just looking at the Nasdaq. Nasdaq actually closed the week a bit more bearish than the other markets. So what you'll see here is we've still got a bearish candle in the sell zone, but it was also the most overextended, and it needed a sell-off more than any of the others. So I'm less concerned about the Nasdaq still closing with a down candle for the week. But coming right back, looking at the Russell, I do expect the market to be bullish. I do think that we'll rally from here. I think that last week's break up through the high of the week before as a confirmation. This week I'll be looking for even more confirmation from the same thing happening, and a break up through the week just gone's high. Let's get precise on what that high is. The high is 814.7, so if it hits 815, then certainly be looking very, very bullish indeed. And really good support down here below these lows, so even if we did decline, I'd expect support to be found there. Everything changes if we broke 780, but until that was broken, I expect price will continue on up. If 780 was broken, it would actually have confirmed on the daily chart lower high, and that would be the point it broke to lower low, so it would be a very significant level. More than likely it will hold. If it didn't hold, it would be bearish, but at the moment the probability lies to the upside for this week ahead. Hope that helps everybody. Happy trading, have a fantastic week, and I'll speak to you on next week's update.